So one of the things that we've got to do in the initial process of getting up and running is we need to get our old account receivable balances entered into Lizzy. And to do that, what we're going to do is we're going to go to accounting receivables and we're going to locate the customer that we're actually interested in creating the receivable for. We're going to select them, and then we're going to come over here and we're just going to click new receivable. At this point, we're just going to tell it that we're going to create an account receivable. We're going to hit next, and we're going to fill in whatever information up here that we want to have. Most of this is self-explanatory, so I won't go into any of it. But the one thing that is very, very important is this bottom offsetting account. Now, we're going to be hitting account receivables, but we want to make sure that we're using either the 310 or the 320 account for owner's equity or retained earnings. And the basic idea is that if you're a sole proprietorship, then you're probably going to be using the owner's equity account, the 310 account. If you're a corporation, then you're probably going to be going against the retained earnings when you're doing this. So you're going to pick the one that applies to your particular company. So in this case, I'm just going to pick the 310 account, and then you put in the amount of the AR that you're going to be creating and save the entry. And that is all that you need to do to get the account receivable in the system. So if you think about it, this account receivable was actually sold in your previous business system, and so we can't record the sale here in Lizzy because then you're going to have the sale reported twice. So by hitting retained earnings or owner's equity, we've basically accounted for the AR so that when the customer comes in to make a payment, we already have his bill here so that we can enter the check or payment against the appropriate record.